What is salary? 7,200 is the monthly salary plus dearness allowance 200. Total it is 7,400. Clear? Then house rent allowance received is 3,000 per month. 3,000 per month. Then rent paid by the employee is 2,000 per month. And place of employment is Gulbarga. Okay. Then you have to calculate the taxable HRA and exempted HRA. You draw the table and calculate it. Calculation of exempted and taxable HRA for the assessment year 2021. First you take HRA received. What is HRA received? HR received I directly taken as 36,000. How it is 3,000 into 12. 36,000 is the HR received, 3,000 into 12. Then less exempted HRA. First point is actual HRA received, 3,000 into 12. Per month 3,000 into 12 it is 36,000 first point. Second point, rent paid minus 10% of salary. Rent paid is 2,000 per month into 12. Annual rent. Okay. Then minus 10% of salary. Salary is 7,400 into 12. 7,400 into 12 means 7,200 salary plus 200 DA. 7,400 into 12. Its answer is 15,120. 15,120. Then next is 50% or 40% of salary. 50% salary you have to take for 4 cities. Delhi, Madras, what are those 4 cities? Huh? I told 4 cities. Huh? In HRA calculation, I told 4 cities. Four cities are, yes. In Gadi, there is some starting trouble. Start other band avula. Yaar ಬರ್ತಿರ್ತಾರೆ ಈಗ ಬರ್ತ ಬರೆ ಹೋಗೋರ್ ಹೋಗ್ತಾರೆ ಅಂದ್ರೆ ಹೆಚ್ಚಾಗಿ ಕ್ಲಾಸ್ ಚಾಲು ಆದ್ಮೇಲೆ ಬರಕ್ ಹೋಗ್ಬೋದು ಇನ್ನೊಂದು ಥೋಡೆ ಇಯರ್ಸ್ ನಿಮ್ ಎಲ್ಲರೂ ತಿಳ್ಕೊಂಡ್ಮೇಲೆ ನನಗೇನು ಪ್ರಾಬ್ಲಮ್ ಇಲ್ಲ. 4 cities are Delhi, Bombay, Kolkata, Madras. Okay, if your residence is in these 4 cities, you take 50% of salary. Other than these 4 cities, you take 40% of salary. So nothing is given in the problem. You consider that as a 40% of salary. Okay, 40% of salary means 7,400 into 12. It is 33,520. Okay, least of the 3 is exempted and remaining balance is taxable. Okay, whichever is less. Out of these 3, 15,120 is the least. You deduct the 15,120 from the total HRA received. Remaining balance is 20,880. This is the taxable HRA. Okay. And my advice to you people is you calculate monthly. Okay. Monthly based you calculate and multiply by the number of months served in that year. Okay. In some cases, the worker may served for all the 12 months, and in some cases he may not be served for 12 months. Okay. Better to calculate monthly base. Monthly you take 3,000. Okay. HR received is 3,000 per month. Okay. And second point, actual HRA 3,000. Rent paid minus 10% of salary. You take 2,000 minus 10% of 7,000, 7,400. That is 740 you take. 2,000 minus 740. What is the answer? 2,000 minus 740. 740. 1,260. 1,260 is the second point. And third point is 40% of salary. You make 40% of 7,400. Okay. Then out of these three, whichever less you take to the outer column. Deduct in the outer column, whatever comes, that is the taxable monthly HRA. Taxable monthly HRA and calculate exempted monthly amount. Then multiply by 12. Okay. It is in rare cases. Okay. Remember this. This is regarding the HRA calculation if the information is monthly based. Then you see the example based on encashment of leave salary. Is it visible or not? Mr. Ajay working in a private company. Ajay is a employee working in a private company. Retired on 1/2/2020. That means 1st February 2020 retired. Okay. After completing 30 years of service and 6 months. His service is 30 years, 6 months he served. Okay. Then encashment of leave salary received rupees 1 lakh. 1 lakh rupee he received for whatever leaves he saved. How many leaves saved? On the basis of the leave saved, he received 1 lakh rupee amount on retirement. Then average salary for the last 4 months, sorry, last 10 months. Average salary for the last 10 months is 4,500. Average is calculated 4,500 per month salary. Average salary is 4,500. Then he has availed 615 leave. How many leaves he used? Availed means used. 615 leaves he used. Then what is the leave allowed to him? You see in the bracket, 30 leaves permitted per year. 30 leaves permitted per year. 1 year he is permitted to live, permitted for 30 leaves. Okay. How many years he served? 30 years, 6 months. Okay. 1 year, 30 days. For 30 years, how many days? 30 into 30. 900 days. Then for remaining 6 months? 6 months means how many years? Half year. Half of that allowed period. Huh? 15 days. Okay. Then what is the total number of leaves given to him? 915. Okay, 915 leaves were allowed to the employee. Out of 915 leaves, how many leaves he utilized? 615. Then what is the number of leaves saved? Huh? 300 leaves saved. Okay, he saved 300 leaves. For that 300 leaves, employer paid 1 lakh rupee as encashment of leave salary. Clear? Employer paid 1 lakh rupee for that 300 days. Clear? Then calculate taxable and calculate the taxable encashment of leave salary. They ask to calculate taxable only, not the exempted. You calculate exempted as well as taxable. Okay. Here I have given the 4 points. I have given the 4 points. Least of the 4 is exempted. Remaining balance is taxable. You see here, calculation of taxable and exempted leave salary. First, you take the encashment received. Actual received is 1 lakh rupee. Then second point, less exempted under section 10 subsection double A. First point, actual encashment received is 1 lakh rupee. First point. Then you take the second point, that is maximum amount. Maximum amount is 3 lakh rupee. It is fixed. There is no calculation. It is fixed by the income tax authority. 3 lakh rupee maximum. Third point is 10 months average salary. You have to calculate average salary first for the 10 months. Then multiply by 10. 10 months salary will be given. 10 months salary is allowed. That 10 months salary is based on average salary of the last 10 months. Okay. It is simply nothing but last drawn 10 months salary. And monthly salary is 4,500 is given the problem. 4,500 per month is there. You multiply by 10, it will be 45,000. You calculate if possible necessity is there to you. 10 into 4,500, 45,000. Okay. Then next point, fourth point, actual salary for the approved period of leave. Actual salary for the approved period of leave. Whatever already you calculated. Total salary, total leave allowed to me was 915. Out of 915, he availed 615 leaves. Okay. Then remaining leaves are 300. Okay. For 300 leave, what is the salary? He has not used 300 leaves. Leave not availed. 300. What is salary for 300 days? Actually, 300 days salary you have to calculate. Average salary or last month salary you have to take. That is 4,500 is the salary per month. 300 days means how many months? In a month, on an average, you have to take 30 days. Okay. 30 days in a month. Then 300 days means how many months? 10 months. Okay. 10 months salary. 10 months salary means per month salary, last salary is 4,500. 4,500 into 10. Huh? 45,000. Okay. 45,000 is the salary for the actual approved period. Then list of these 4 items is exempt. List of the 4 is exempt. Whichever is less is exempt, you take to the outer column. 45,000. Okay. 45,000 is exempted and remaining amount is taxable. 1 lakh rupee total received. 1 lakh rupee is received. Out of that, 45,000 is exempted from tax. Remaining amount is 55,000. 55,000 is called as taxable encashment leave. Clear? This is the 5 marks question. Okay. About the tax-free incomes, you should have knowledge regarding HRA. HRA comes in each and every problem in salary chapter. And second is, you have to remember regarding post office SBI account, unit trust of UTI, then central government notified securities, then how to calculate this gratuity, pension, gratuity and pension, gratuity, pension, and this leave salary. These 3 aspects comes for 5 marks. Okay. These are the important you remember. And this I complete the tax-free incomes. This I complete the tax-free incomes. And next unit is income from salary. Okay. As I already told, income tax is only one chapter. Okay. Income tax is only one chapter for your become final year. First, you know the introduction of the income tax. Then you have to know the technical terms in income tax. Then what is residential status of the assessee. Then what are the tax-free incomes. Whenever you come to know the tax-free incomes, then partially tax-free and fully tax-free, and then taxable incomes. What are the taxable incomes? What are the tax-free incomes? What are the partially tax-free incomes? If you know all these things, then it is possible to go ahead. Otherwise, you will face problems. Okay. This is the basic thing required. Then we come to calculation of the income of a person. The income of a person is calculated on the basis of 5 heads. Person is of 8 types. Out of 8 types, for your syllabus, there are only 3 types. Assessment of individual, assessment of HUF, assessment of partnership firm. These 3 persons are for your study. Then, if you consider an individual, that individual is having certain incomes, and those incomes are classified into 5 categories, 5 heads. Okay, the income of a person is divided into 5 heads. First head of income is income from salary. An individual may receive income in the form of salary by rendering service or giving service to the certain employer. That is the first source. And second source of income is he may let out his house property. Suppose he is having more than one house, or the house is too big. Whatever house he is having that is too big, that house may be let out. Okay. By letting the house property, he may receive the rent. That is the second source of income. Second source of income. And third source of income is he may undertake any business or profession. He may undertake any business or profession. That is this third source of income. And fourth source of income is he may sell any capital asset during your previous year. By selling the capital asset, he may earn the income. That is the fourth source. And fifth source of income is whatever income not covered under the fourth head. Whatever income is not covered under the first 4 heads. I don't know that income. Okay. Whatever income is there with you people, you give the answer. How you earn? I earned by way of salary. Or you may say that I earned by way of letting the building. Okay. I earned by way of business or profession. I earned by way of selling the asset. Then some more income is there. How you earn? You give the answer. Some more income is there. If the question is there for some more income, then you have to take that income in the last head, that is the income from other source. Okay. Whatever incomes not covered under the first 4 heads, you have to take in the 5th head. You may give explanation for that, or without giving explanation, you pay tax on that. That is the 5th head of income. Okay. Therefore, we study the incomes one by one. The first source of income is income from salary. We make that salary as a one chapter. Salary is a one chapter. For this 5th sem, I think salary, business, and capital gains. 3 units are there. Salary, House property, business or profession. These three chapters are for fifth semester. And for sixth semester, capital gains, other source, set of and carry forward losses, and assessment of individual and assessment of partnership. Okay, we'll study them in the sixth semester. So first we come to the first head of income, income from salary. First head of income is income from salary. What is salary? You know it. There is no need of explaining salary. What is salary? It is remuneration given by employer to employee for the services rendered by the employee. It is the general meaning of salary. According to section 17 subsection 1 of the Income Tax Act, in ordinary language, the salary means periodic payment received for the services rendered. Periodic payment received. Periodic payment means monthly or weekly or fortnightly. Okay. Ordinarily, we say that salary means periodic payment received for the services rendered. Then, the salary means any payment made by the employer to employee for the services rendered by employee as per the contract of employment. As per the contract between the employer and employee. That means at the time of appointment, employer and employee contract is there. If employee accepts the agreement, then the contract starts. That is called as order will be issued by the employer. Okay. So as per the agreement between employer and employee. Okay. As per section 17 subsection 1 of the Income Tax Act, the salary include, the term salary include. Before this, I will try to say regarding salary. To take any income under the head income from salary, there must be a relation between employer and employee. You remember this point. So many people receive the salary. All the salaries will not be taken into income from salary. Okay. What is first condition necessary to take the income under the head salary is there must be a relation between employer and employee. Then you take the income under the head salary. Otherwise, no. These are the incomes we take under the head salary. Wages. Wages taken by a worker comes under the salary. It is in between employer and employee. And NET, annual payments, for example, retirement benefits, pension, comes under the salary. Gratuity, retirement benefit, comes under the salary. Fees, commission, perquisite, or profit in lieu of salary or wages. Okay, perquisite is a benefit. Advantage given to employee. Additional advantage given to employee, benefits given to employee in the form of cash or kind, that is called as perquisite in general. Okay, it may be fees, commission, perquisite, profit in lieu of salary or wages. Next, advance salary. If you receive the salary in advance, that is taxable. The next is payment received by employee in respect of period of leave not availed, whatever already you calculated. That is the leave, earned leave salary is taxable under the head salary. And next is contribution made by employer towards recognized provident fund in excess of 12% of salary. This is the point you have to remember. Okay. Recognized provident fund. I'll explain it in the next class. What is recognized and what is not unrecognized? What is provident? Recognized means it is the provident fund recognized by the income tax authorities under the Income Tax Act 1961. Whatever provident fund recognized by the income tax authority, okay, that is called as recognized provident fund. If the contribution made by the employer, if the contribution is made by the employer to the recognized provident fund in excess of 12% of salary, here salary is nothing but salary plus DA if eligible for retirement benefit. Okay, then what is this provident fund? Provident fund means for the benefit of after retirement or post service benefit. The employer and employee will contribute some amount to this fund. This fund is to be paid to the employee after retirement or on death of employee. Okay. So first employee contributes and the same amount is contributed by the employer to this fund, and this fund is available to the employee after retirement or on death of employee. Okay. So whatever employer contributes is the additional income to the employee. Employee received salary already, and this fund is given to the recognized provident fund organization. This fund goes to government or any other organization. Okay. And this is the additional payment given by employer to employee indirectly. This amount is available to employee after retirement. Therefore, 12% of salary or less than 12% of salary is exempted from tax, and the excess is taxable. Suppose employer and employee contributes 15% of salary. Employer contributes 15% and employee contributes 15%. Totally 30% is given to recognized provident fund. Given to provident fund, and that is payable to employee after retirement. Then 15% contributed by employer is there. Then out of 15%, 3% is taxable, 12% is exempt. This is the point you remember. This point comes in each and every problem of salary. Okay. Then next is interest credited to recognized provident fund. Interest credited to recognized provident fund. The recognized provident fund contributors credit the interest on the provident fund if the rate of interest is more than 9.5%. Then excess rate of interest is taxable. Excess rate is taxable. If rate of interest given is 9.50 or less than 9.50, then that is exempted from tax. Remember this point. Okay. For example, rate of interest. Let us consider 10,000 is the interest credited to your account on RPF. Okay, 10%, sorry, 10,000 is the interest credited to your account. Then rate of interest allowed by the organization is 10%. Rate of interest is 10%, and 10 amount credited to our account is 10,000. Then what is the taxable interest and what is the exempted interest on RPF? What is the rate of interest allowed by authority? 10%. Interest credited to your account is 10,000. Then what is the taxable and what is the exempted? Then how to calculate it? What is my question? 10,000 is the interest. Rate is 10%. What is the taxable HRA, taxable interest, and what is exempted interest in this case? Yes, anybody? Who is the highest scorer? Yourself. Huh? 9.5% is already explained there. No problem. 0.5% is taxable. Then you tell me the answer. I will pay. How is he calculated 500? Anybody? 500 answer is correct. I agree with that. How is he calculated? I don't know. Please explain. Anyone? No, no, not you. Any other? Boys side, who is the scorer? ನೆನಪಿಟ್ಟುಕೊಳ್ರಿ ನಾ ಯಾವಾಗೂ 35ರವರೆಗೆ ತ್ರಾಸ ಕೊಡುದಿಲ್ಲ. ನನ್ನ ಟಾರ್ಗೆಟ್ ಇರೋದು ಯಾವಾಗಲೂ ಅವು 90 ದವ್ರು ಹಿಡಿತೀನಿ. ಎನಿಬಡಿ? Come on, tell me. Answer is correct, no doubt. 500 is the taxable. I agree that. What is interest? 10,000. Okay. This is 10%. What is 1%? 10,000 means 10%. What is 1% of interest? 10% means 10,000. What is 1%? Have you studied commercial arithmetic or not? In your become part 2. I taught commercial arithmetic for 12 years. ಇಷ್ಟು ಸಿಂಪಲ್ ಕೇಳಾಕತ್ತೀನಿ. 10,000 ಅಂದ್ರೆ 10%, 1% ಅಂದ್ರೆ ಎಷ್ಟಾಯ್ತಪ್ಪ ಅಂತ ಕೇಳಿದ್ರೆ 10,000 means 10%. 10,000 means 10%. 10% means 10,000. 1% means how much? 1,000. Simple, is it? This very simple. 1,000. 1,000 means 1%. Then 0.5% means 500. 500 is exempt. Remaining 9,500 is taxable. Sorry, 9,500 is exempted. 500 is taxable. Okay. Then how to calculate this? I'll give you the clue. First you take if interest is given, you take total interest less exempted. How to calculate exempted means total interest into exempted percentage divided by total percentage. You apply the equation. What is the equation? Exempted interest is equal to total interest into exempted percent divided by total percent. 10,000 into 9/5 divided by 10 into 10,000 is the exempted. Clear? Remember this equation. These are the incomes you have to take. Second point is perquisite. First you have to take the salary. Okay, salary point. That is the point relating to salary. And second point, perquisite. According to section 17 subsection 2 of the Indian Income Tax Act, the third perquisite is derived from the word perk, which means personal advantage or personal benefit. For the personal benefit of the employee or the personal advantage of the employee, whatever benefits employer gives, that is called as perquisite. Okay, employer gives the salary, no doubt. Along with salary, any advantage is given to the employee. Any advantage is given to employee or benefit is given to employee. It may be in the form of cash or it may be in the form of kind. That is called as perquisite. Okay. So perquisite means personal advantages. Personal advantages. All the personal advantages, not related to service, not related to job. Personal advantages given to the employee by the employer are called as perquisites. Okay, it may be in the form of cash or kind. That perquisite may be used for office as well as